Hi, everyone. We're here at the Metals Investor Forum in Toronto, and I have with me today David Cole, who is president of EMX Royalties. David, thanks so much for being with us today.
My pleasure, Peter. Always good to be here at Metal Investor Forum.
Looking forward to our chat. All right. So, David, EMX is a royalty company. You've been around for a while. You have actually what I would qualify as an exceptional track record in exploration discovery. Maybe you can tell us what sets EMX apart from other royalty companies.
Probably the main thing that sets us apart is the fact that we're rooted in prospect generation. So we've been executing the prospect generation business model for 22 years, acquiring prospective mineral rights, adding value, selling those on, typically early stage, and keeping royalties and other commercial terms associated with that, building the base of our pyramid with long-term discovery optionality, some of which have played out nicely. Right? Then to augment that, to gain scale in the business, we've also done some astute purchases to bring in more advanced royalties. That combined has resulted in nice value creation and increased cash flow.
Speaking of cash flow, this is something I think that viewers should hear about. If you could give us some idea of what your cash flow has been like in the last maybe year or two, where we're looking to be this year, and if you can compare that with your market cap.
Sure, I'm more than happy to. So we have ramped up the cash flow substantially as assets have come into production, and we have purchased producing assets, in addition to the way that we've historically made money as well, which is through early stage payments, as these assets have evolved up the pyramid and becoming cash flow. So you've seen our cash flow graph shoot up. We're talking about total money coming in the door well in excess of $30 million a year, pushing $40 million a year. That's put us in a situation where we've had distinctly positive cash flow now for 8 quarters in a row.
Excellent. And how does that compare to the market cap, for example?
Well, we're a $200 million market cap. And one of the best ways to look at royalty companies and the way the banks analyze us, right, is looking at net asset value and net asset value per share, right? So the right now, and people talk about the PNAV, the price that we're trading at relative to the net asset value as defined by the analysts. And right now, we're trading at a significant discount to our PNAV, which is not unusual for small royalty companies at this point in time in the cycle. But it does represent immense value for those folks that are buying our shares. And because of that low PNAV ratio, that's why we're buying back stock.
Excellent. So that's, we were in a Q&A session earlier. Someone asked you about that, and I thought that was interesting in terms of going that route versus paying out dividends. And maybe you can speak to that for a moment or two in terms of the advantages.
I'm a big fan of returning to the shareholders, and paying dividends is a great idea, but they are double taxed. We pay tax corporately, we pay out the dividends, they pay tax again. By buying back our stock, we're able to avoid that. So we're enhancing everyone's percentage ownership of the company by buying back stock. We bought back 4.45% last year, 5 million shares, right? But the real kicker comes in that we're buying that at a 0.4 or 0.5 PNAV ratio. So we're doubling our money for the shareholders, right? And PNAV's going up. Excuse me, the NAV is going up.
Right.
Yeah, and I'll talk about that.
Sure. All right. So give us an idea maybe what the metals mix is at EMX, and where does the bulk of your revenue come from?
Yeah, I'm happy to talk about that. My philosophy has been we want to be exposed to mineral rights worldwide. I've never been focused on copper or gold or silver. Rather, prospective mineral rights, because we win when discoveries are being made on our assets. That naturally has resulted in a diversified portfolio. Right now, we get a little bit more income from gold than we do copper, with strong credits from silver, lead, zinc, and molybdenum. But over the course, as we move forward with some of these assets, the copper mines are particularly long-lived. A lot of the future of the company will be based in copper and its related metals.
Excellent. And so I remember seeing in your recent presentation, there were 2, major assets of yours that are contributing, the bulk to this cash inflow. Maybe you can just touch on those.
We've got 6 producing royalties and a lot of pre-production payments as well. But the 2 that have the largest net asset value, right, are Caserones, operated by Lundin Mining Corporation in Chile. It's a big, huge copper mining complex. We have a huge royalty footprint with a dozen prospects that they're working on. They're advancing a new discovery at Angelica, and they're drilling high-grade mineralization at depth with in-pit drilling at Caserones itself, turning this into multi-decade mine life and district. And so that's copper and molybdenum. Is currently paying about $10 million a year. We view that as a kingpin asset. Then the one to marry with that is copper and gold, and that's in the Timok magmatic complex. That's a geological terrain in Serbia, largest historic copper and gold producing region of Europe, and the site of the most significant copper gold discovery in the history of Europe at what's called the Timok project. Some people call it the Çukurova Peki mine. That's operated by Zijin, and they've done a fabulous job of getting that developed. They're mining from the upper high-grade zone now. That's already paid us $12 million in revenues. I paid $200,000 for this royalty.
Wow.
Yeah. Okay.
That's quite the return.
They're just mining in the upper high grade zone. The huge lower zone's 2.5 billion tons at close to 1% copper equivalent. It's a phenomenal asset. Zijin is putting in $5 billion of capital expenditure to advance that. They already started construction of 125,000 ton per day mill to process the ores from the lower zone, whilst they're continuing to mine from the high-grade upper zone. And the story doesn't end there, right? 7 kilometers, also within our royalty footprint, 7 kilometers to the south and southeast of that mine. They have 12 operating drill rigs drilling within our royalty footprint.
Wow.
They have stated in their last report that they will announce a large and high-grade, those are their terms, discovery within the next period. We're very excited to hear about this.
That's great. So, wow, some potentially big upside, additional upside from just that one asset again for you.
It's great to be exposed to well-endowed real estate.
Apparently so. We see that playing out very nicely. Looking forward, where do you see, besides what we just discussed, where do you see other and additional growth coming from?
We're very pleased to have a royalty on the Abra Silver Diablios discovery that's being advanced. I know that's one you follow.
It is, absolutely.
And that, it's a silver, gold, silver, depending on where you're at in the system. Nice combination of both metals, and it just keeps getting bigger. And we're delighted. We have 1% royalty there. We have a $7 million stage gate payment coming to us here in the next few months. We're pleased about that. And that's a great example of discovery optionality within the portfolio.
It's being moved forward quite nicely, and I'm going to say relatively quickly as well, and just keeps getting better and bigger, and wonderful.
I'm glad you like it.
I love it. It'll keep contributing to EMX as well.
Yeah.
So maybe we can kind of wrap things up. Tell us what are, I guess, the biggest catalysts that followers and shareholders can look forward to this year.
Yeah. Lundin has announced that they're putting in $22 million in exploration. That's up from $14 million last year. That means they're finding things they like.
Exactly.
They've talked about the Angelica project right next door to Caserones, well within our royalty footprint. They've talked about higher grade mineralization at depth at Caserones. These are discoveries being made within our ground, no cost to us. This is why you want to own royalties. So discovery optionality there. Then let's go to Arizona. The Peak deposit, which has been announced. It's a lateral extension of the lead zinc silver system at Taylor. You're familiar with, right?
Absolutely.
That lateral extension zones into a copper zinc silver system where we have a 2% royalty that cannot be bought down, has no cap. And South 32 has announced some fantastic drill holes there. I think you're going to see more of those. I'm very pleased with what's happening there. It's a great example of execution of the model. We have a royalty on the Park Sailor deposit, part of the Cactus system. That's being advanced very quickly. Some of the best drill holes there within our royalty footprint. Then we come across the Atlantic Ocean. Viscaria mine, copper, iron, and gold is going into production next year. That'll be a nice sized royalty for us. And then the big one are these discoveries ongoing in Timok.
Excellent. Well, certainly lots to look forward to and exciting times, and sounds like you're in the right places at the right time with EMX, and again, exposure all over, lots of potential upside. Definitely one to watch.
I appreciate it.
Thanks very much, David.
Thank you.